Thank you so much. Good morning, everyone. I want to begin by recognizing we're on the traditional territory of the Esquimalt and Songhees people and thank them for the ability to meet on their land. And thank you for joining me for the release of Public Accounts 2019-20, looking back to the last fiscal year. Public accounts are an important part of ensuring transparency and accountability within government's finances. They're also an opportunity to reflect on investments made in Budget 2019 that contributed to BC's economic foundation. We all know that the world is a very different place than it was when Budget 2019 was introduced. But as we look back at the last fiscal year, we can also see that investing in people, services, and a sustainable economy is just as critical today, if not more, than it was in 2019. Budget 2019 included the full elimination of MSP premiums, one of the largest tax cuts in BC's history. It also included the new BC Child Opportunity Benefit, a historic investment that starting this fall will put money directly back in families' pockets. Budget 2019 also eliminated interest on student loans. It made the largest investment in climate action in BC's history with Clean BC. It introduced the most substantial revenue sharing agreement with First Nations in BC's history, and it increased investments in critical services like education and healthcare. And Budget 2019 did this while maintaining a low level of debt to GDP, eliminating the province's operating debt, and leading the country in economic growth. As you know, we are prudent in our forecasting and building a sustainable economy through investing in BC's most powerful resource, its people, continued to be our focus. And today, we're reminded that that's more important than ever. COVID-19 has ravaged economies across the world, and BC is not immune to those impacts. As you'll see in today's presentation, the effects started for BC, as they did for other jurisdictions, during the final quarter of the last fiscal year. BC isn't alone in facing the challenges of COVID, but we are in a strong position to be able to weather them. We started 2020 with zero operating debt, AAA credit ratings, and one of the lowest unemployment rates in the country. We have a diverse and resilient economy, and we saw a modest surplus and steady economic growth in the first 3 quarters of 1920. But as we moved into the final quarter of 1920 fiscal year, the impacts of COVID were beginning. Specifically, the pandemic led to lower tax revenues, a bigger loss at ICBC in the 4th quarter, and unexpected government spending and health authority costs in response to COVID-19. Because of this, fiscal 1920 ended in a deficit. This wasn't the fiscal outcome that we had worked towards, but it was certainly inevitable, given those early days of COVID. While COVID-19 challenged and changed our province, our government moved quickly to provide a supportive, comprehensive action plan to support people and businesses through this pandemic. And we're going to continue to be flexible and responsive to the needs and the challenges ahead. So I'll now move into today's presentation and speak to the specifics that we saw in the 1920 fiscal year. So first slide. For the majority, this slide speaks to the forecast changes from surplus to deficit. And certainly, as I said, for the majority of the 1920 fiscal year, economic growth, household income growth, and government revenue and expenses remained in line with our expectations. By the 3rd quarter, we actually saw some slight improvements in revenue, which allowed, again, for some statutory program spending. But in the final 3 months, just before fiscal year end, revenues decreased as the impacts of COVID-19 on household income were estimated and the final results from Crown corporations were known. And I'll get into the specifics in the next few slides. So next slide. So a focal point for public accounts, as you know, is the operating result. And as I mentioned in my opening remarks, as we moved into the final quarter of 1920, the impacts of COVID were being felt. Because of this, the operating result for the fiscal year ending March 31st, 2020 is a deficit of $321 million. Next slide. So let's look at some of the specifics. This operating result, as I mentioned, is lower than we expected in the Q3 updated forecast because COVID had an impact, as I mentioned, on the revenue accruals for taxation, on financial market conditions that led to an impairment loss on investments held at ICBC. So just to run through some of the specifics for you on the slide, taxation revenue lower by $735 million overall, which include personal income tax revenue, property taxes, and consumption taxes. All of those down, all of those losses in that final quarter of the fiscal year. ICBC, and again, I'll go through some specifics as we go along. ICBC lower by $285 million, as you can see from the slide. Other revenues, we had a range. Some other revenues were certainly higher. Federal contributions, fees and licenses, investment earnings, all were up. Natural resources down, and so that calculates to the numbers that you see there. Other Crown corporations, again, all higher revenue than expected, than in change from Q3, except for the Lottery Corporation, which was lower by $30 million. Expenses, again, if we take a look at statutory spending, I mentioned an increase in statutory spending, fire management, emergency program spending, Crown proceeds, those all were additional expenses. We recovered spending from other parties. That would include things like pharmacare, health services, federal contributions around infrastructure, for example. And then the spending savings, that's a recalculation again of estimates between Q3 and Q4, the close off of the year. And that was lower, as you can see, by $313 million, which gives us the number that we run into. Next slide. So just to, again, go through some of the detail, if you take a look at the third quarter, a $203 million surplus was forecast, with an additional $300 million in the forecast allowance to add additional prudence. So we were continuing on with our prudence to year end. But as I said, the unexpected, nobody could have imagined the impacts of COVID arriving late in the fiscal year, which certainly, as I said, exceeded our prudence and had an impact on our financial results. And the most notable piece of all of that, of course, is the estimate of certain taxation revenues, though then were lower than expected because of a lower estimated household income for the 2020 calendar year. And again, I'll speak to that specifically around calendar year versus fiscal year as we get to the next slide. I also think it's important to note that our measures, you will remember when we tabled our COVID action plan in March, one of those measures was to reduce the school property tax for commercial properties. A large cut of about 25% for businesses, for commercial properties. That cost is calculated again over 2 fiscal years because it matches up with the calendar year. And so we have to account for $171 million in the 1920 fiscal year. And that's why you see those dollars included in this fiscal year. You'll see the rest of the spending on the support for businesses will come into the next fiscal year. Financial market conditions, I know most of you will have seen this, certainly, were lower than anticipated on March 31st, and that resulted in a significant impairment loss on investments recognized by ICBC. And so that gets included again at our end of year. And then included in these public accounts as well are the initial costs that we did not anticipate, that were related specifically to COVID by ministries, by post-secondary, and by health authorities. And that's the dollars, again, that you see, the $11 million and $35 million that were costs that had to be built into the budget to make sure that we were providing supports immediately to people during COVID. Next slide. So this is the tax year versus the fiscal year, just to make sure this is outlined. As I mentioned, COVID had an impact on our taxation revenues, even though the pandemic arrived in the final quarter of the fiscal year. There are certain taxation revenues like personal income tax and property tax that get calculated on a calendar year, January to December, rather than the fiscal year. And so we have to recalculate when we take a look at our fiscal year. We have to make sure that that 3/4 of the 2019 tax year includes the beginning of the calendar year of 2020. And so because of that overlap, it meant that the taxation, the personal income tax, in the first 3 months of 2020, when COVID had an impact, which were the last 3 months of the fiscal year, had to be recalculated based on lower household income. And that had a big impact on these public accounts that you see today. Next slide. So I think it's important to note the strong foundation that we came into this, this challenging time with. We had higher than expected growth up to the third quarter for the calendar year 2019, 2.8%, higher than predicted. Our unemployment rate was the lowest in the country, again, on an annual basis. Investments of $4.8 billion were made in capital infrastructure. And these investments, again, were done while keeping our debt to GDP affordable. Our ratio was 15.1%, again, one of the lowest across the country. And we again affirmed our credit rating with all 4 rating agencies, which again shows the strength of British Columbia. And I believe, again, will do us well as we move into the recovery. Next slide. So the previous slide spoke to changes since Q3, and this slide, as you can see, shows changes from budget 2019 when it was tabled. So just to run through a few specifics for you on the slide. Taxation revenue, I've talked a little bit about that. We saw lower personal income tax because of those 3 months. We actually saw higher corporate income tax coming in. And again, corporate income tax is calculated on the previous year. So that again shows why we saw the personal income tax calculated on this year. Corporate income tax coming in as an increase because of the previous year. A drop in property transfer tax, PST and other taxes. Crown corporations, again, ICBC, I've mentioned the loss in BC Lotteries, corporations as well. Natural resources, again, we started to see a moderation of the economy as we were moving into 1920, and that was impacted obviously by natural resource prices, by some of the revenues coming in that particular area that had dropped. The other revenue that is listed here that is higher included federal contributions. We saw some social transfers and health transfers coming in. We saw higher revenue in post-secondary fees and other fees coming through as well. And then miscellaneous, everything from wildlife and environment recoveries to sales of goods and services, and investment income, which was higher by $67 million. So that's included in your other expenses as an increase in that end as well. Just to touch on the expenses, again, I've mentioned some of the areas. Health and education were higher. Teacher pension plan had an adjustment in it, just one of those additional pieces. Natural resources, I mentioned the drop in the revenue coming in from natural resources, but we also saw in expenses. Wildfires was an additional cost, $81 million in that particular piece. Protection was higher. That's, again, Emergency Program Act, costs that are there. Some courts and policing are included in that piece as well. And then other expenses, that also includes contingency dollars that are transferred from general government over to the sectors where those are being paid for. So you'll know we had compensation costs as we completed compensation agreements. Those dollars then get transferred to the ministry and get accounted through the ministry as well. Other sectors, just to give you a quick read, transportation sector, for example, was lower because of some changes in timing on projects that occur each year. You'll know we've talked about this whenever we go through public accounts. There are timing on projects that may be postponed for a period of time or have a longer delay because of a number of reasons. Interest rate costs were lower, and the social services sector was higher, again, because of caseload pressures that were in place. Next slide. So revenues, again, the next couple of charts look at changes compared to the prior year. Revenues, you can see on personal income tax, again, higher by 552. That incorporates the higher corporate income tax, the lower personal income tax, property taxes, consumption tax were higher, and this was the first full year of the employer's health tax as well, so that's included here. Federal contributions, I mentioned those. We received the health and social services transfers. Other revenue, I mentioned already the natural gas, the challenges that we received in the resource industry. Crown corporations, I've spoken about those specifically. Fee revenue, and some of the fee revenue that came in around international health fees for students. You remember we transferred off from the MSP. Those were additional revenues coming in, and interest income higher as well. So that completes the specifics on that slide. Next slide. So just talk a little bit about expenses compared to the prior year and costs and investments that we made in people. As I said, many of these will do us well as we move ahead into our economic recovery. Health, we focused on primary care services. As people will know, one of the big challenges facing our province, of course, are people without medical connections to professionals, doctors, and others. We increased primary care services to support everything from mental health services to women and children, expanded seniors care. We invested in community supports and other infrastructure, emergency preparedness, and other community infrastructure. Education. We invested in secondary tuition for former youth in care, a waiver for tuition, support for Indigenous training, and investing in education. And again, all of those will do us well as we move into economic recovery. And then in the social sector, we focused on the need for affordable housing and childcare. And again, one of the things that we've seen during this pandemic is the fact that those, the gaps that have been there over a number of decades really have been pointed out, and the importance of these services and supports have really been pointed out. And that, again, points to the investments that were made that will really make a difference as we move to recovery. So I'll now move to the next slide that talks a little bit about our infrastructure and the supports that we put in place for infrastructure. We spent $4.8 billion on taxpayer-supported capital projects, again, to build British Columbia. Schools, roads, public transit, and hospitals. You can see the breakdown from the slide that's listed here. And it included capital projects across this province, providing jobs across this province, but also building the critical infrastructure to be able to help the economy continue to grow. Again, investments that are going to make a difference when we look at economic recovery and when we look at creating jobs and support for people to get back into the workforce and to be able to look at those employment numbers continuing to rise. I mentioned schedule changes. There are some schedule changes when it comes to capital investments. The capital investments taxpayer supported were lower than expected, and again, that's simply to do with timing and when projects are done, where cash flow happens, where scheduling happens, where procurement happens with projects. That is specific to the number that you see when it comes to taxpayer supported capital investments being lower. Those dollars then get moved into this budget because of the timing, or the next year's budget because of the timing, so it's not lost dollars in the capital budget, it's simply the timing issue. Next slide. So looking again at taxpayer-supported debt, that increased by $3.5 billion in the current year to finance capital infrastructure, which, as I mentioned, was lower than budget by $155 million. Taxpayer-supported debt increased for investments in power projects and was $268 million higher than the budget due to capital requirements for commercial government enterprises. So BC Lottery Corporation, BC Hydro, and other government enterprises. Next slide. So as you know, there are a number of key indicators that we always look at as we bring in our budget, and of course one of those is tracking debt to GDP. And I think again this slide speaks to the strong economic foundation that we have in our province. We've moved to be the second lowest taxpayer-supported debt to GDP in Canada after Saskatchewan, and that again applies to the fact that BC is the only province with a AAA credit rating from the international credit rating agencies. Next slide. We know how important it is to manage our debt and remain focused on those key metrics that are often used. And we'll be watching, of course, as well, the interest bite, which monitors the cost of debt as a ratio of revenue. BC, for example, spent 3.1 cents of every revenue dollar towards taxpayer-supported debt last year, which is the lowest in Canada, tied with Saskatchewan. So again, our debt to GDP, our debt to revenue numbers, very strong. Again, very responsible to look at our capital spending, particularly given the COVID-19 and the challenges that we're going to face. Next slide. So audit opinion, and those of you who've been through public accounts will know that this is a often talked about qualification. We have one long-standing qualification on the deferral of revenue. It remains. It's been a qualification item since 2011-2012, and it relates to restricted grants received for projects and when those dollars are accounted for. So just to give you an example of that, if we receive contributions, for example, from the federal government to build a school, the expectation is that we'd use those dollars to build the school, and we'd use it as a school. Accounting requires us to amortize that school over 40 years, reporting an expense in each of the 40 years as the school is used to deliver education. We certainly believe from a fiscal perspective it makes sense to recognize the federal contribution as revenue on exactly that same basis. And we're not alone. Ontario continues to use this kind of process as well. So again, that's the only qualification that remains on the audit opinion. Next slide. So this just gives you a reminder of the dates. We delivered our economic and fiscal update in July. First quarterly will be coming in the month of September. We're beginning the budget process already for the next budget coming up. Second quarterly report comes in November. Economic Forecast Council meets in December, which gives us, again, a read of what people are seeing. And I think that'll be critically important, more important again than ever because of the issues of COVID. And February, of course, will bring Budget 2021. So just to make some closing remarks, and then I'll turn it over for the technical briefing. There is no question that our province has experienced incredible changes in the past 6 months. But that doesn't change the critical foundation we have as a government. A foundation built on affordability and opportunities for all British Columbians while building a strong, sustainable economy that works for everyone in our province. It's a foundation that puts people first. And again, the investments that we made in 1920 are making a difference in people's lives. And those same investments, along with our economic recovery plan that's to come, will support people through COVID-19. As we build that strong foundation for a strong and safe recovery, we are encouraged. We see some bright lights when it comes to positive signs in our province. In July, for example, BC created 70,200 jobs and experienced a 2% drop in unemployment. We're seeing robust capital spending that again is going to help us as we move ahead, and the best debt affordability in Canada. We have a long way to go, there is no question, but the work we did in better economic times are going to help us and keep us strong now. So I'll look forward to your questions after the technical briefing. Thanks.
Thank you, Minister. We will now move into the tech briefing, which, as a reminder, is on background and not for attribution. Following the briefing, we will move into the technical portion of the Q&A. I will now remind everybody to please press *1 to re-enter the queue for Minister James' portion of the QA. If we just give ourselves one moment here. Okay, we will now go ahead. We will start with Rob Shaw, Vancouver Sun.
Well, hi, Minister. I guess it's difficult looking at these figures to try and extrapolate from them something meaningful for where we are now. Can you update us on, we're at $13.5 billion deficit projection for the current fiscal year. Is that still accurate? And what's the latest on the current fiscal year that you can tell us as of today?
Well, we'll be bringing forward an update at Q1, which will come forward in the next few weeks. That will give us an update on where we are. As you point out, when we brought the fiscal statement forward in July, we said it was based on a snapshot in time. So at this stage, I expect it will be very close to the July statement. But again, we'll need to wait until we bring forward the Q1 results to really give a specific. But there's no question that it will be a challenging year and a couple of challenging years, a few challenging years ahead when it comes to the finances. Not simply, I mean, you will have all seen the numbers come out for Alberta and their Q1. This will be a global challenge, no question.
Do you have a follow-up, Rob?
Yes, thanks. Can you walk us through how these numbers affect ministerial holdbacks and what we used to define as bonuses for the heads of Crown corporations and post-secondary institutions and health authorities and that type of thing? It doesn't look like ministers receive their full 20% holdback. And do you have any expectation of, based on these figures and based on where the province is financially right now, should executives in Crown corporations and other places expect to receive their holdbacks or bonuses based on our current financial situation?
As you may know, Rob, when we became government, we got rid of most of the bonuses. Those were just parts of salary. So most of the executive compensation now simply includes a salary. It doesn't include a bonus. So most of those were removed. We have not made changes, as I said, in the legislature when I introduced the changes to the balanced budget legislation to be clear that we weren't going to balance the budget over the next number of years. I also said that we hadn't made any changes to the ministers' holdbacks. We felt that that was just additional time and energy that we wanted to spend, in fact, on providing supports for the public and providing supports for the people of British Columbia. So we will not have balanced the budget, and so therefore the ministers don't receive half of their holdback. Ministers' budgets were balanced, but in fact the revenue did not come in, and therefore ministers won't receive that half of their holdback.
Next question is from Lisa Houston, News 1130.
Minister, I'm just wondering if you can talk first off about just what this means to people who are sitting at home. They look at these massive numbers. They hear you say that there's going to be a couple of hard years at least ahead. What does this mean for people who are trying to, send their kids back to school, worried about sick time, worried about how they're going to make ends meet?
Well, I think the important message in all of this is that government has your back, that in fact now is the time for us to put supports in place for the public, for businesses, to be able to support families, to be able to get through. As you know, we were quick off the mark with our COVID action plan and putting that in place and making sure those supports were there. We're going to have deficits, there's no question, just as every other jurisdiction is going to. We need to spend every dollar wisely. We need to be fiscally responsible, and we will do that with every dollar that we spend, but we will also ensure that those supports are in place for the people of British Columbia. That's really what people are looking for. They're looking for government to be there for them, to provide the supports. We're going to have, as I said, some challenging times, but I'm also confident when I look at how the public has pulled together around COVID-19, how we fought together to be able to look at our numbers, to be able to hold those numbers, to be able to bend the curve. We're now going through again a reminder about the importance of our work together. I'm confident that people are going to do that as we move into economic recovery as well. We've seen some real glimmers of hope. We've seen some good numbers when it comes to jobs coming back again in the last few labor force numbers, but there's still many, many people and many families and many businesses in our province who are struggling, and government is going to be there for you. So yes, we're going to be running a deficit, but now is the time to make sure that we put supports in place for both economic recovery, as we will in the next few weeks, and also supports for people so that they can get through these difficult times.
Lisa, do you have a follow-up?
I don't know if this is the right time to ask, but what we haven't seen here is where that $1.5 billion is going to be spent for the recovery. When are we going to see more about that?
That'll be out in the next few weeks. That's not long away. We'll have that out fairly soon.
Next question is from Mary Brooks, Island Social Trend.
Hi. My first question is, we've seen the impact of a one quarter impact of COVID. do we multiply that by 4 to get an indication of how bad that is for the 2021 fiscal, or how are you kind of hoping to describe the further impact?
Well, I think as I pointed out, we saw the final quarter of last year's fiscal have the impact of COVID, but that was very early impact. That really, you saw things starting to shift in January and into February, and then really when people shut down was March. So it's really impossible to take those numbers and compare them to the next number of quarters. Q1 will give you a good read of that. That's why I mentioned our July statement really was simply a fiscal update based on the point in time, but Q1 will give us another read of where things have gone the last few months. Q2 again in November will give us another read. So we monitor it obviously daily, but we also will monitor it and report out to the public on those regular reports as well. That'll give you a better sense of where things are at. Mary, do you have a follow-up?
Yes, thanks. So with the federal revision of CERB into EI flavor for everybody, either directly into EI or small businesses and so on a parallel program, is BC going to top that up like you did with the worker benefit?
Again, we're taking a look right now at the economic recovery plan. We will be looking at how we support people getting back to work. I think that's the key for everyone is people want to get back to work. They want those businesses to be operating so they can go back to work so they don't have to collect CERB or otherwise. And that really will be our focus. But again, I'll wait until the economic recovery plan comes out in the next few weeks.
Les Lane, Times columnist.
Oh, thanks. Minister, you're committed to support as needed and when asked for. When do you get to the point where you are going to have to start curtailing support? There already is a constant barrage of asks, and they're just going to be intensifying with the predictions for the restaurant industry and the deferment payments that are coming due in a couple of weeks. Can you afford to continue guaranteeing support whenever it's needed?
Well, I think, as I said, it's critical to recognize that every dollar has to be spent wisely. Providing support to people doesn't mean simply spending money. It means spending money effectively, using people's dollars wisely to be able to provide those supports. That's why we put aside dollars for economic recovery, so we could make sure that that was focused on economic recovery for the next number of months. So we will continue to make sure that those supports and programs are in place. We will do it in a fiscally responsible way, and we'll do it in a way, as I said, that spends those dollars wisely. But right now, every jurisdiction across this globe is looking at how we provide support. Will we see a second wave? Will we need to provide support in the next number of months? I don't have that crystal ball, but I do know that right now our focus is the people of British Columbia and making sure that they have the supports they need to get through this, the businesses of British Columbia that need the supports, and that's what we're focused on as government.
Do you have a follow-up, Les?
You added $1.5 billion a few months ago because the federal money was on the table and was matching it. It was basically 50% off, sort of. Are you continued to adopt that? When federal programs come up, you're going to match them as needed?
It was $1 billion that we put aside to match the $1 billion from the federal government. And again, many programs aren't revenue shared, so it depends on the program. We will examine each program as it comes in, and if it makes sense and if it supports the people of British Columbia, businesses of British Columbia, and families of British Columbia, then we'll take a look at it, yes.
Thank you. Next question is from Vaughn Palmer, Vancouver Sun.
Good day, Minister. Today's presentation emphasized British Columbia's position relative to other provinces. We have a low debt to GDP. We have a better credit rating than most of them. We use a smaller share of our revenues to pay interest. Are you confident that going forward, British Columbia can maintain that relative position to other provinces? Is it one of your goals as you manage your way out of all of this, that whatever you have to do, we maintain a better position than most provinces?
Well, I think we certainly want to make sure that British Columbia maintains our strength, and really, as I've said all along, and as we've said as government all along, our main strength, what builds a strong economy in British Columbia, are the people of British Columbia, whether it's the small business owners, whether it's the families, whether it's the entrepreneurs, whether it's the workers in businesses. They are the people who provide the strength to our economy. So will we continue to invest in those people? Yes. What will that do to our credit rating, for example? I think it'll be interesting to watch over the next while to see what the credit rating agencies do, because you will see every province in deficit. You'll see every province not in the usual kind of place that they're looking at when they're looking at ratings. But right now, as I said, our focus really is on providing the supports that are in place, because if we don't provide those supports, we won't have economic growth. We won't be in a position to be able to show BC's strength unless we provide those supports so the economy can grow. And so that's really our focus. We're doing this to make sure that we build a sustainable economy so that we can maintain our position. But I have great optimism. I'm an optimistic British Columbian. I'm an incredibly proud British Columbian, and I think we've done extraordinarily well as a province, and I think we'll continue to do that as we move into economic recovery.
Vaughn, do you have a follow-up?
Yes, please. Beginning the Treasury Board process and the work preparing for the provincial budget that will be presented next February, are there any changing goals for you from what you brought to budget making when you became finance minister 3 years ago? I mean, obviously, pandemic is a different outlook, but are there any changes in goals in terms of what you hope to accomplish?
Well, I expect, just as we've done with the COVID-19 action plan and just as we did with the restart plan when the Premier and I tabled that plan, that we continue to focus on our three priorities. We continue to focus on affordability for families, on services and supports that people rely on, and building a sustainable economy. So I don't see those priorities changing. But I do see the budget having more of a focus around economic recovery because we weren't in a position. It's a very different position that we were in last year when we were looking at how do we make sure that we provide enough trained workers? How do we manage industries that were struggling for workers? We now know our unemployment numbers are much more challenging. We know that there are specific groups who have been hardest hit by COVID. It has not been an equal opportunity pandemic. We know that women, we know that youth have been impacted. We know that certain sectors have been impacted. So I expect it will be a more targeted approach as we go into the budget to make sure that we continue the economic recovery work that we're doing into the budget process. And I expect that'll be a little more of a focus than you will have seen in previous years.
Next question is from Bob Mackin, Breaker News.
Yes, good morning. You're showing increased full-time equivalents at Crown corporations and agencies, and executives for Crowns and agencies seem to have received full pay, but of course you're forecasting less revenue because of the economy. When do you start to look at cutbacks for salaries and cutbacks in employment at various Crown agencies and even ministries?
Well, as we do in every budget cycle, we will be examining all the spending of government, whether it's in that area or whether it's in any other particular area. We'll be going through all of that process as we go through the budget process for this next fiscal year. So, as I said, everything gets reviewed during that time period.
Do you have a follow-up, Bob?
Yes. This could be the last public accounts that you deliver because there could be an election campaign starting as soon as next month. Is this fall really the right time for an election when there really is no economic stability and the government's having a hard time offering full services to the public?
Well, I think as everyone will know, and as the Premier has reminded us from the very first day that we were elected, we are a minority government. And we could any day have to be prepared for an election. I'm focused right now on building our economic recovery plan. I'm focused on the budget process for this next fiscal year, and that's where I'm going to keep my focus.
We have time for one more question, and that is from Richard Zisman, Global News.
Minister, on the ICBC numbers, does this seem realistic in terms of a financial picture, considering that those stock market losses could be short-term and we don't have a clearer picture of what the overall impact of less cars on the roads was due to the pandemic?
Well, I think, again, as you heard from our comptroller, this is, again, the end of the fiscal year, so we had to include those dollars and that loss at the end of the fiscal year. Again, as we bring forward Q1, as we look at Q2, you'll see more up-to-date numbers, but things certainly, a lot of the positives, as you've talked about, less cars on the road, less accidents will have an impact on the budget as well. I think the fact that last year we lost over $1 billion when it came to ICBC, and this year the final loss is 376. I think shows the improvement. It shows the hard work that the Attorney General has been doing in the area of ICBC, and I expect that hard work, in fact, as you've heard the attorney say often, will pay off for people in lower rates when the changes that he's bringing in for ICBC have an impact. And so I expect the numbers will be looking more positive, not less positive, when those changes come in.
Do you have a follow-up, Richard?
I do, and more to what Lisa asked about earlier in terms of the economic recovery money. Is there anything that's been presented today that changes the outlook, and what should people anticipate will be the focuses for where the $1.5 billion will be spent, as well as that additional $1 billion earmarked for municipalities and transit? And will that all be packaged together when you make the recovery announcement?
It certainly will be all packaged together. We'll be bringing forward a fulsome plan that will really look at economic recovery for our province areas and sectors specifically that are struggling. We'll have some focus. I have to say that the responses that came in, the work that people did in bringing forward their ideas, it really has been quite extraordinary, and I think shows again the willingness of British Columbians to work together around economic recovery. So I don't see anything today that's going to shift that. As I said, certainly, my hope was that this fiscal year would have been balanced, that we would have been able to bring that forward. But again, given the unexpected COVID numbers, given the changes that occurred with ICBC's investments, again, because of COVID, completely unexpected in the last month of the fiscal year, very difficult to be able to manage that. But that won't change anything around the recovery dollars and the dollars that we put aside, and we'll have that plan out in the next few weeks.
That's all the time we have. Thank you, everyone, for joining us.
Thanks, everyone.